Category number 2, monopolistic competition. Monopolistic competition is when you have many businesses in a market that offer differentiated products. Companies are not perfectly competitive, and characteristics like brand name, quality, and experience can make a difference. This helps companies stand out in the marketplace. Buyers will still have a lot of options and they will have preferences because there's enough differentiation in monopolistic competition that buyers will have preferences that they'll actually pay more money for. And that's a key distinction between perfect competition and monopolistic competition. Since sellers offer differentiated products, they can, if they have a good product, sell for marginally higher prices, which can also result in higher profits. Sellers are still price takers in this situation. Buyers still have some control over the market because there are substitutes. They might not be perfect substitutes like in perfect competition, but they're still substitutes to a product. So a company doesn't have a ton of wiggle room to raise prices, but if they have a good product, they can raise the price. Examples of monopolistic competitive markets will include hotels, restaurants, clothing. This is where you have a lot of options in the marketplace, but there is differentiation within those markets where people will have preferences over one type of product or another. In the short term, a strong brand name or early product to market can result in better than average sales and profitability. However, over the long term, brand names and differentiation are key to holding on to market share, but marginal revenue will decline over the long term due to competition. In a monopolistic competitive market, there is a lot of incentive to innovate. Whether you're first to market with a product, whether you have technology that's better than another competitor, monopolistic competition has a lot of competitors. And with competition, it's going to drive innovation because everyone's going to try to one up the other. And if you can one up the other company, you're more than likely going to be able to drive higher sales and higher profits. Now, I've mentioned brand names several times talking about monopolistic competitive markets. Advertising is one thing that can help develop a company's brand name. It helps companies differentiate themselves in the marketplace. A brand can influence a buyer even before they step in the store. A brand with a reputation, a positive reputation, can sell products and services at a higher price, which ultimately leads to higher profits. Developing a solid brand name is something critical in a monopolistic competitive market. Are there any barriers to entry in a monopolistic competitive market? Now, it's going to be a little bit harder than a perfectly competitive market because you're trying to differentiate yourself from the rest of the competitors. That is a little bit more difficult than a perfectly competitive market, but there isn't a ton of barriers to entry if you want to set up a company or a service, unlike the next two categories that we're going to talk about.